Hey, good morning, friends. It is Monday, April 2020, and here we are in our portfolio overview for the week and kind of thinking through strategy and what we're going to be doing for the week. So as always, let's go through our positions first. Here we are in EEM. Of course, we have numerous ladders in EEM. So you can see all of these adjust. We had our initial iron condor, and then we adjusted, looks like every week for a number of times. And then we currently have three positions. We have the cool ladder right here that we're actually pretty close to getting off, and then we have another iron condor here. So we brought in a total credit of $1.05. We're trying to get out for $1.55 because this initial iron condor that we've brought in a total of $1.14 on, we're shooting to take a loss at $1.30, and then making up the rest of that here in this vertical end, this second iron condor for a total of 30 cents per credit. We're at 5 credits. And so this is what we're looking at here, right? So looking at trying to get this off here, okay? So this is the iron condor. We're really just playing the time premium game now, just trying to make sure that our time allows us to get there with some level of profit. We've got a pretty wide break even right now, about 20%. So really, when we think about the credits that we brought in already, if we get these off for where we're hoping to get them off for, EEM is going to end up being fine. All right, let's go on to EWJ. EWJ for June is fine. We're actually probably looking at getting this off very soon. Really nice wide break evens here. We can set our slices, break even, and then let's add a slice here. So I mean, we are really close. Got a 71% probability of profit. This thing's coming off soon. Right in the middle, we're totally EWJ. EWZ. So we're in pretty big in EWZ. Again, numerous adjustments in EWZ. So we go, where is EWZ? Okay, so as you see here, we've brought in a total of right now 60 cents worth of credit from an adjustment and a ladder. And we have quite a few credits here. So with these adjustments, it's showing that we're down pretty big. But again, this is because we've made these adjustments so far. Ideally, we'd love to bump up back in here. I don't think it's going to happen. I think we're going to continue to flirt between these ranges right here. So, we'll see. We've got quite a few positions on here in EWZ. So just waiting for, again, this time premium kind of thing here. GDX looks good. We've been able to get in our position in both June and July. So as you can see, break evens here are 22.40, and what is all the way up here to 33.50, 33.60. So again, just waiting for the time to do its thing. Let's go here to July. We've had to adjust July already because we had an initial position here at 20, right? And so this is the original position. We've adjusted this, but we've also added a position here, and then we've added a ladder all the way down here. And so we're trying to play both of these positions here for July, and we'll make adjustments as we're still really far out. We're still 88 days out from expiration here in July. So here's the position that's kind of underwater. We start making positions. We'll begin rolling some of these up. As you can see here, we're still 80% out of the money right here on GDX. And of course, gold is pretty bullish right now. So that's where we're at with GLD. For June, gold, GLD. A little bit of a frustration. Put this on quite a long time ago. And volatility just increased, implied volatility increased, which made this purple curve pretty annoying. It just didn't time that entry particularly well. IYR, a lot of adjustments already in IYR. So you can see here, we brought in this credit was all the way, I think it was a 70 short strike and a 100 short strike in the initial position. Moved that short strike down to 78. We flirted on this upper end a little bit, but on the whole, it's been fine. Only position we have on for September right now, all the way out here at 42, right? So our short strike is at 42. Probably need to add something in the vicinity here. So that's likely going to go on the to-do list. But again, with IYR, we are 151 days out, so we've still got plenty of time here. But I wouldn't mind putting on like a 50-48, and then I don't know, you could probably do a 90-92 and get a pretty decent size credit here. So might look at, in fact, let's just go ahead and add 420 game plan. Let's just go ahead and add September IYR. You know, we're still, and then we could even begin add initial positions for September and any July expirations that we have here. So as we keep going through, S&P 500, it looks fine. We'll ignore this trade. You know, we're really far out here. We just go to S&P. So we've got 25 days till our put call butterfly. Really far out of the money right now. Again at 70%. So, you know, not a bad trade right now. Just watching what happens. We're gapping way down this morning, so down a percentage or so. So gonna certainly watch this. We have an alert set at 300 to adjust. So gonna sit there and do that. TLT. We've adjusted this position once, which is why you're seeing this curve so far down. So adjusted, we've already taken in some credit. Certainly not as, certainly not as risk on as we currently have, because we have already banked some profit here. USO is interesting. Okay, so USO. I've been pretty aggressive in laddering into some USO positions. USO's fallen to 386. Certainly don't want to buy USO, right? Certainly not looking at buying USO. What we can do is we can sell some credit below. And, these are just these quick little base hits that over a month, if you're aggressive, you can add up. I'm going to look at laddering into some additional USO positions here. So we go here, and we're going to see a lot of, we're down 40 cents here, so we're down about 10%. So we've got this position here, which is now going to be in the money, right? We had quite a little bit. So I think that I only have 5 positions here in USO. Yeah, so I only have 5. Might look to add another 5 here. So especially if we see this, it got a 50 delta, 61 delta. So 61 delta, 40 cent move. We might see another 20 or 30 cents. If I were to do the math, we could do it. Might see another 20 or 30 cents here on this particular option. So I'll probably look to ladder into a May 1 4 put, and then let's actually take a look at 10 delta. So we're going to get another, might look at this 3.5, and so look at either May 1 3.5 or 3 put today. I'd like to do the same thing though here, right? So we're going to see 28 delta here. Also want to look at laddering into this May 8 position. Not quite sure what we're going to do yet. Going to watch the open and see how that works. But now, and this is where it gets really interesting, right? We can go out. We're going to see a little bit of a move here in these 3s. And I'd like to look at adding a May 15 3 put. Okay, so going to look at adding this May 15 3 put here as well, just on this massive move down, and it's going to move this ladder here or further down, right? So it's going to move this ladder here further down, and then we're just going to watch what happens. So since I'm going larger in this May 1, right? So I have this buy right at 2 cents. We're going to change that, right? So if I get 40 cents, I might change this buy cents to 10 cents, right? Because, I mean, 2 cents requires us to have a move up. Right, with this type of trading, what we like to do is we like to see that it can move in any direction. And so we're going to adjust this so that the position can move in any direction for us, and we still make money. Of course, we're underwater on these UVXY and VIX trades. I've got to begin looking at what I want to do with UVXY and VIX. Let's go into XLE. XLE has a really interesting profit graph right now. We have, of course, our huge... very tight adjusted iron butterfly. So let's even go to XLE. So XLE, you can see these adjustments here. Ton of adjustments. So this initial iron condor we got for $1.07. We've got a buy order to get this off for 75 cents. Here, if we can get this right. So we laddered into this on 415. So we've had this June position working. We're looking at 218 per credit size, and of course this is only one contract. Sorry, one contract here on this 5.7, and this is a 5 contract. So I mean you're looking at close to 500, another 200 here, a vert ladder at 15 cents, at another 100 there, and I mean so. This has the potential to be a really huge winner here in XLE. Just got to continue to watch what happens here. And of course, we have our July position. July is looking good. Not a lot happening here in July. Just kind of chilling in between our break evens. 88 days till expiration, so we still got quite a bit of time before we start needing to look at adjusting here in XLE. Might go ahead and set an alert since we haven't already. Okay, still going through XME. XME looks solid. Not a whole lot there. XRT also looks fine. Here we've got a nice little ladder here that we're also looking at trying to get off. So we're in between our break evens, just letting time continue to do its thing here. We are 60 days now out from expiration here on these iron condors. Okay, so these are our positions. We have got quite a lot across numerous sectors. And, you know, it's just one of those things where we've set up a pretty decent portfolio. Let's beta weight it real quick. So as we look at these charts now in our major market indicators, so we are right here at this 50-day simple moving average. I think this is going to be a major area here for us to continue to watch. We've destroyed this drawing. Haven't done really anything with this drawing yet. But let's watch how this 50-day simple moving average acts over the long term. I actually think we can be pretty bearish here, right? And just say that while this has been a crazy move off of the lows just over a month ago, on what day is this? This is the 23rd, right? So just over a month, we've seen a massive move. Ultimately, when we look here, right, we've seen this, and we've got to think short term at least, we're going to see a little bit of a retraction. This move has been, at least in my opinion, too much, too fast. But when we look at our indicators, we've got our 50-day simple moving average providing resistance. We've got a number of major resistance points. So I also think some major psychological resistance points as well. 300, as we approach 300, we're going to continue to see things just, I think, evaporate a little bit here. Some of this momentum evaporate a little bit. And that's what we're seeing on our fractal energy, right? So we saw our fractal energy go crazy, and we saw a big move up, right? So big move up. And now we're slowly starting to retract on some of this fractal energy. Okay. Saw it here, and we haven't moved as much, right? Really got quite a few dojis here, doji style candles. 4 out of the last 5 days last week. Let's go into this weekly, right? So 3-year weekly. Still seeing bullish, right? Seeing some bullish candles, but we're looking to gap down. Right, it's looking to gap down here. So it's going to be interesting to see what happens here in S&P 500. Okay. Put call ratio spread, put call moving down a little bit more into this bullish area. Okay. So we start getting into this 0.45 area. I think we start to get a little bit more bullish here. Compared to our gold, so we're starting to see a little bit of a move here. Let's see what our yellow line, how it acts as resistance here. If we don't see this act as resistance, but again, since we're breaking down a little bit here in SPX this morning, I actually think that this is going to continue to kind of guide our relationship between gold. Okay, same thing here in TLT, right? So acting as resistance, EEM. I was pretty flabbergasted when we were at 7-year highs in EEM a couple of months ago, and yet here we still are, just continuing to move the needle a little bit here in EEM. Really quite striking. Weekly, okay. Here we are in our SPX Weekly Chart. Okay, so we have crested back above our 200 simple moving average. Here we are at our 50 weekly simple moving average, and so acting as resistance right there. Really fascinating stuff here. So I think, and especially since we're gapping down again, I think that we're going to see this as pretty significant resistance, okay? All right, let's get out of here. We got a couple of small caps there. IWM, we're going to see some of the same things. Let's get into our volatility. We've seen volatility slowly start to decrease. Let's see what happens, right, with kind of long term. I think we're going to see some level of resistance. We're still very far out of our bullish area for volatility. So I think it's important to know that I'm still not bullish equities and aggressive in equities until we get back to this area. The VIX, VXX. Trying to make some money back in VIX. Actually got challenged on some of our put butterflies last week, which was frustrating, but here we are. We saw another big jump. Our term structure is still in backwardation, which is nice, but one of the things you'll notice here is after our big spike, right? So we had our big spike all the way basically to 80. We see this area right here, and this is pretty typical in action with the VIX, okay? So you're going to see quite a few days of just in, and then a big down, okay? And then we're going to see some consolidation and a big down. And I guess, I don't know this for sure, obviously, but I bet we're now going to see some consolidation in this area and then another down day, right? As we look at 2009 as kind of a guidepost here for us, what we know to be true is that we saw our initial volatility pop, but then the market went down and volatility went down as well, because this level, right, just was not sustainable. A VIX of 40 for a long time is not sustainable, right? As we're up here in this area, we're looking at 3% daily moves in SPX, right, or SPY. Those type of moves just simply aren't sustainable, and so we know that eventually we're going to see lower volatility with a lower market if we continue to move, just because the breadth of movement just isn't sustainable. UVXY going to continue to see, we're down almost $100 from the top. And people that bought these puts up here, sitting real nice just because of intrinsic value, right? Yield curve, interesting yield curve. We obviously see the worst day on a couple days before the low. So the low was on the 23rd. Still not a great day for the yield curve. We are moving back though, so that yield curve is making a little bit more sense now. Okay, gold futures. Let's go for gold. We're at a doji here. This is our daily here in gold. Peaked up here. Seen 5 down days. Looking. We're gonna see what happens here. Wouldn't surprise me actually if we put in this bottom here. Got a little bit of a level of support here, so let's see what happens. Actually, quite a lot of support. Of course, we've got some support here, but we've also got it right there as well. That coincides somewhat well with the real bodies of these candles. Getting into some of our other major market indicators, here's what we know though. It's going to be similar, right? It's going to be similar. We're seeing all of essentially the same chart across the board here in the Qs, but what's crazy, right, is not really even that far away from getting back from all-time highs. It's just somewhat mind-boggling to me. But we'll see what happens this week here in the market. Okay, so we've taken a lot of look here. What kind of is the game plan going into the week? Okay, so as I look to manage my portfolio, of course, I'm going to continue to watch. I'm going to continue to watch what happens here in the overall market. Okay, I'm going to continue to watch my positions, make adjustments here in my positions as I need. I'm going to try to stay as evenly over the market as I can. So like this type of EWZ trade, ideally I'd have a little bit more centered, right? So this would be over the market, but with adjustments that becomes harder to do and it doesn't reflect previous profits, right? I'm going to look for opportunities in things like USO. It's been, we've traded the hell out of Ford lately, and Ford's going down. I certainly don't want to do anything here at 5, but would I like potentially to, if we saw a 10% decrease in Ford from here, would I like to pick up some of these 4s and 4.5s? Absolutely, I would. So thinking things like that. I'm gonna continue to watch through hands, and see, what's popping on the, premium selling, overbought, oversold, short, long. These scans right here, my low volatility calendar spreads, right? Those are some of the things that I'm looking in. I'm gonna be systematic. I'm gonna continue to be systematic. And I'm going to continue to try to sell premium over the market and make, 3 or 4% per month. So that's the goal here. And so that's it. I'm going to watch for September. I do want to go ahead and begin getting some exposure in some of these as initial positions in September while I wait for things like, our July's to drop, but unfortunately we don't always get the level of drop that we want, and when we want. Some have July's already, others don't. So like XLE already has July, and we're in July, right? And this 90 to 100 days for these iron condors is really where I like to be, but I do want to go ahead and get some exposure on. Add a couple of positions. Some have been taken off, so I want to add a couple of positions, right? So that's going to be something that I'm going to look at this week. And really, I'm just going to be nimble and adjust with the market. I don't want to have any true directional bias, even though, implicitly I think I'm short, but I don't want to have any bias as we're looking for which direction we want to go in the market. Okay. So that's it. So let's have a great week. Let's try to make, some money this week. And we'll keep doing our stuff. And until I see you all next week, happy trading.